A very good morning, ladies and gentlemen, and a warm welcome to Financial Markets. Thank you so much for tuning in to Smart 24 TV. My name is Anthony Savali.
Victor Chiveru.
And together we're going to get you through what is currently trending in the world of financial markets. We're so glad that you are joining us from across the world. This show brings you the latest content on financial markets and especially in stocks, in terms of what's happening in the markets, what's happening to the companies that you're investing in, and the latest news that affects the different segments of financial markets. We'll get straight to business right now, starting off with the Uganda Securities Exchange. What's exciting today about USE, Mr. Victor?
So, analyzing the Uganda Securities Exchange, would want to specifically go into a comprehensive review of yesterday's trading session. And we actually witnessed a really dynamic trading session as of yesterday. And looking at it, it is actually characterized by significant changes in trading volume, turnover, as well as share prices. So the comprehensive analysis actually delves into various aspects of the market's performance, and we're looking at the overall market activity and in individual equity performance, trading trends, and the impact on the key market indices. But going straight into the market overview, the trading volume and turnover as of yesterday, at the close of yesterday's trading session, left us with a total of 940,250 shares traded on the Uganda Securities Exchange, and they are reflecting a substantial 343% increase in volume compared to the previous trading day. And the corresponding market value actually surged to about 47,477,086, marking a remarkable 324% improvement in turnover. And this surge in trading activity actually signals an increased investor participation and heightened market interest.
And when you look at, Victor, these numbers, we are looking at Cipla Quality Chemicals taking the lion's share. And in the recent past, we've seen as well Stanbic Bank take a lead in terms of the traded volumes. But what do you say of Airtel? We have now had, since the 27th of October, the company has been listed. Actually, after the closing of the IPO, the company listed a few weeks ago. What do you make of the performance of Airtel so far?
Well, we are not seeing any notable movements from the stock, which is not coming as news with the entity having just listed onto the securities exchange. But we are surely seeing some high expectancy in the operation of this particular stock and its competition with MTN on this particular market. So of course we're noticing investor sentiment, and people that actually invested in Airtel as we speak are actually more firm with their decision. They were a bit hesitant as the listings were happening, but after the actual involvement into the market, they're showing that they're actually sure that this stock is going to make profits for them.
What do you make of when you look at Airtel? It listed at 100 shillings. It's still stuck there. I doubt there's been any shares that have been bought on the secondary market so far. But my worry, Victor, is maybe this is the consequence of big institutional investors like NSSF, because honestly NSSF took the biggest share of this market with over at least about 199 billion invested in the company and holding the largest or majority shares of the listed shares on the company. I think it's putting us on the flip side instead of actually giving us a push in terms of market activity, as institutional investors always hold on stock. They never want to sell. And when you have a market such as this one that is growing, as the Uganda Securities Exchange, you want market movement. You want even the slightest movement of 2 shares, 5 shares being sold makes more sense than a market that is stagnant. To me, I would say, I don't know if you agree with me, Victor, the institutional investors have done more harm than good. I would say so. And giving us a picture right now of Airtel, it's still at 100 shillings, but I'm pretty sure the moment it goes even slightly by 1 shillings lower, the few retail investors will want to sell off. they will want to sell off, and the sell-off will be at lower prices, I believe. But if we had more retail investors, we would be having more activity, we would be having actually more prices going up, still going down, but there would be more gains than losses, to my opinion, at least from the experience I've seen from, for example, MTN Uganda and other stocks like British American Tobacco. There has been a lack of retail investors, and this has put the market in an illiquid state, which is not a good one.
Well, that's also a very valid point of view. But you do realize that NSSF holds a larger percentage of these floated shares. So it deciding to actually have activity with that particular stock will cause unnecessary liquidity. And for a stock that has just joined the market, that is a leap of faith. So I feel like institutions like NSSF holding larger percentages of these stocks within their accounts kind of creates security even for the retail investors, because these people are the reason that stock is not falling. It's not pushing, but it is not falling below 100. And Airtel already made a promise of how they're going to give out their first shift of dividends. Yeah. So looking at all this, they're actually backing up the fact that other retail investors are still on board with Airtel.
I do. I'll side with that one. However, the only two ways investors gain from any stock is one, through capital gain. That is if the price goes up. That is for our viewers here. And two is through dividends. That's if a company is not doing either of those two, then there's no reason to invest in that company. But for Airtel Uganda, there's good news. At least they promised 90% dividend yield, and that means that they will be issuing at least 90% of their price. That means that if the price is at 100 shillings, their dividend is most likely to be at 90 shillings. That's what we call a dividend yield. And that's a good point, at least, to rely on. But on the flip side, when you look at the capital gains, not much yet coming in.
Well, focusing on the market capitalization, the Uganda Securities Exchange current market capitalization still stands at an impressive 16.1 trillion Ugandan shillings. So obviously this is providing a comprehensive picture of the market's overall value, and this figure of course serves as a key indicator of the exchange scale and economic significance within the region. But shifting on to equity performance, looking on the gainer side, we are seeing KCB Group that is leading the gainers, and KCB Group experienced a 1.25% share price appreciation, closing at 479.49 Ugandan shillings per share. And of course, this is a positive performance, and it underscores investor confidence, and this is specifically within the banking sector of Uganda, and this is contributing to an overall market uplift. But it was followed closely by East African Breweries with 1.05 increase in share price, and East African Breweries also made a really notable contribution to the overall market uplift. But we're also seeing Jubilee Holdings coming up, as well as Equity Bank, and Jubilee Holdings and Equity followed suit with the share price appreciations of 0.9% and 0.07% respectively. So these gains contribute to the overall positive sentiment in the market. So what do you think of these gainers?
I would say I'm not so impressed, given the fact that all the gainers are illiquid stocks. Like I said, KCB, East African Breweries, Jubilee Holdings Limited, Equity. All these movements are due to factors like forex and inflation at the moment. But I'm more interested in the losers as well. They have Cipla Quality Chemicals, which has lost 25%. Just in a single day. After we're of course going to be sharing with our viewers the story of how Cipla had gained at least 5 shillings after the acquisition of after acquisition by African Capital Works. But on the gainers, like you have mentioned, KCB, East African Breweries Limited, and Jubilee Holdings, yes, the gains are there, but this is just to put a disclaimer that these gains are not due to activity, but rather factors outside the demand and supply of some of these stocks. And I'm particularly interested in the KCB stock. It has been doing well, especially on the Kenyan market in Nairobi. And again, here reflects what's happening there in Kenya, as well as East African Breweries Limited. Otherwise, I would still demand more from cross-listed stocks, especially in terms of activity.
Well, on the loser side, we're also going to focus on Nation Media Group and Centum Investments, as well as Kenya Airways. And Nation Media Group, Centum Investments, and Kenya Airways all witnessed share price decreases, and albeit to lesser extent. So this is indicating a mixed performance among all losing stocks. But looking at the trading activity, the top traded equities, we are looking at Cipla Quality Chemicals, and despite it being among the losers, we're actually noticing it recording the highest trading volume of 812,200 shares changing hands. But this suggests heightened investor interest and trading activity in the pharmaceutical sector. But other active equities were Stanbic Bank Uganda, which actually is not coming as a surprise, and MTN Uganda and DFCU that also experienced notable trading activity with 123,400, 4,350 and 700 shares traded respectively. So shifting our focus to the market indices, the all-share index, Anthony, what do you think of the performance?
The all-share index at least paired or lost at least 0.85 points down to 903.28. This is despite of the increase in the turnover as well as the increase in the volumes that were traded. Like Victor mentioned earlier, at least we had 343% improvement in the volume and 324% improvement as well in the turnover. Unlike the improvements we've seen in the volume and the turnover, the all-share index, which is maybe a giveaway for our viewers, a picture of the whole exchange, how it's performing. It's a calculator of the average performance of all the cross-listed and the domestic listings on the stock exchange, at least declined by 903.28 points. Now, when you look at the local company index, which tracks the aggregate performance of local stocks, at least this decreased as well by 0.55%, down to 278.7 points. Now, both indices are indicative of the fact that the losers had a lot of impact on the performance of the entire exchange in general yesterday, and this is mainly due to Cipla, which lost at least 25% of their stake there in the tradings yesterday. But I would say there's hope for much better performance as we wind down the year, though we are running out of time, I would say. And very soon we are going to be having a release of the Capital Markets Authority report of the first, second and third quarter performance of the year 2023. That will give us a much better picture of how other products are doing. But currently, I would say the indices are giving us a picture mainly of what's happening in the entire market, and it's not a very good picture at the moment. However, there is hope for better performance as well.
Well, thank you, Anthony. But before we wrap up the summary for the Uganda Securities Exchange, we want to shift our focus on one of the equities, which is particularly Cipla Quality Chemicals, that is actually bringing out some really influential news that would be important to investors. So, Anthony, what is coming in from Cipla Quality Chemicals?
Well, now on Monday there was an approval. There was an approval statement. Actually, the approval was last week, but the exchange felt the impact on Monday, and this was an approval of the takeover of Cipla Quality Chemical Industries by a regional competition regulator, which slightly raised investor expectations at the Uganda Securities Exchange on Monday. Cipla Quality Chemicals is a prominent manufacturer of antiretroviral drugs used in the treatment of HIV/AIDS, as well as malaria, tuberculosis, and hepatitis B medicines in Uganda. Now, on Monday, the temperatures were high, Victor, and the price was at 65 shillings, but it rose to 70 shillings as a result of investor expectations being raised. Now, the acquisition was by the Common Market for East Africa East and Southern Africa COMESA Competition Commission approval that transferred majority shares of the companies last month from Cipla Limited to at least Capital Works South Africa. Now, Capital Works is an investment company and subsidiary of Capital Works Limited, which is a US-based private equity firm.
We are seeing a lot of heat within Cipla as of this week, and 25% noted in losses is indeed a really big percentage. But would you, Anthony, would you highlight how that particular exchange and Cipla's performance this week is affecting new and old investors?
Well, when you look at the share price on Monday, it increased, like I said, from 65 shillings to 70 shillings shortly after the news that COMESA had approved the transfer from the Cipla company to African Capital Works. Under the terms of the takeover, Africa Capital Works, SSA, has acquired at least 51.18% stake in Cipla. And this company is a sister company of a former investment company, which is at least initially had 11% stake. Now, what I think investors felt like was that this company is an African company. It's based in South Africa, owned by Mauritians. And this gives you the African spirit, sort of, that now maybe Cipla is back to the African continent. If you remember, Quality Chemicals initially was a company entirely owned by Ugandans, but then Cipla bought stake into Quality Chemicals, and then they expanded to Cipla Quality Chemicals. Now, going back to the buyout, when you look at this buyout, Cipla is really exiting Quality Chemicals, if we could say, and Africa Capital Works is acquiring the biggest stake. So investors felt like this is going to be a very good move for Cipla. It's going to be a very great move because we're getting back to African ownership, and this could mean better performance, at least for most investors. The acquisition took effect in November 2023 on the 14th, and the official name will revert to Quality Chemicals Industries following the exchange or the change in ownership. The Cipla counter on the USE registered minimal trading activity on the 15th, while its share price was stable, still at 70 shillings. However, yesterday the price actually fell by 25%, as we have seen, from 70 shillings to 52.5 shillings. Now, this is as a result of a profit warning which was later issued. The profit warning showed that Cipla's profit in the last quarter, that is the third quarter 2023, had dropped from 60 billion to 30 billion, and that drove investors crazy, and perhaps is the reason as to why we are seeing this particular drop in price.
Now, just for context, the current trading rules applied by the Uganda Securities Exchange actually require listed companies to publish periodic financial results within 4 months after a gazetted reporting date. So the company is yet to pay any dividends since 2018, and it is a worrying development that has led to frustration among retail investors keen to recoup their investment in the short term. But faced with poor earnings and investor pessimism, the share price has actually fallen by more than 50% since 2018 with the low trading volumes. But while the initial public offer stood at is it 256.5?
Absolutely.
Yeah, and it was about $0.7 per share. The trading price closed at 100 Ugandan shillings, which is approximately $0.03 US dollars at the end of last month. So the share price further dropped to about 95 Ugandan shillings, which is $0.026 US dollars at the start of last week, following an announcement of the new top management changes. So Emmanuel Katongo, the executive board chairman, declined to comment on the matter about the outgoing CEO, but email queries to the company CEO had not been addressed by the time we tried to seek information from him. But the firm's total turnover increased from 76.7 billion Ugandan shillings in September of 2019 to 122.5 billion Ugandan shillings in September of 2020, according according to the company records. So looking at all these numbers, it's actually, we're looking at a total loss that grew from Ugandan shillings 14.4 billion in September to about 16.3 billion in September of 2020. So the basic loss per share also rose from a negative position of 3.97 to about 4 Ugandan shillings over the period that is under review.
Yeah, well, when you look at, Victor, the pharmaceutical industry in Uganda, it is a sector that is growing. We have so many new pharmaceutical companies that are cropping up. However, my worry or anxiety comes from the fact that most of the investors in these companies are not ready to invest in research and development. Now, if we don't, Victor, invest in research and development, it means we are going to continue manufacturing the so-called generic medicines. Generic medicines, in other words, implying these are medicines that have already been maybe discovered, and so we are sort of remanufacturing or buying patents from these primary manufacturers and then, you know, manufacturing on a larger scale. But if we invested, for example, if a company like Africa Capital Works, like investors are thinking, if it could actually get to invest in a research and development budget and maybe have a department for CIPLA, because there's no, in East Africa, there's no single pharmaceutical with a research and development department. And that is something that puts us in a very bad position where we are relying mainly on research that is done outside Uganda, and that means that we have to buy those patents, and that's a cost that we could actually undercover if we get to invest in research and development. So my question to Africa Capital Works would be, and to investors, they should be asking themselves, first of all, is Africa Capital Works ready to invest in the research and development segment of the pharmaceutical business? Number two would be, what are the top priority capital expenditure projects for the new majority shareholder? Because the company already has projects that are going on. There's an oncology project that the company would want, and you know, cancer drugs are on demand right now. There's a lot of demand for cancer drugs, especially in Uganda and in Africa as well, because CIPLA supplies drugs not only to Uganda but the entire Africa. Now that would be another big question. Are they ready to fund new projects? Because new projects mean new sources of income. New sources of income mean the profits are going to rise. We've seen the profit drops that we're talking about currently. And one of the strategies that would require from a new majority shareholder is, what is he going to invest in? Where is the capital expenditure going to go? Next, does the new investor possess a magic bullet of a troublesome government drug supply contract? We've had an issue with drug supply contracts being given to foreign pharmaceutical companies, yet we have our own pharmaceutical companies that are manufacturing the same drugs. Are they going to be able to to have an upper hand with the government purchase or with the government contracts, not only in Uganda, but in the whole of Africa? And finally, my final question would be, would Capital Works mobilize new private sector clients for the drug manufacturer? CIPLA, one of the challenges currently they are facing is a reliance on governments. And governments right now are not in position to pay, like Zambia, which had a debt for almost 5 years without paying. These are challenges that governments face. But if we could have private clients, private sector clients, that would be a very big boost to the pharmaceutical industry. And I do believe Africa Capital Works would have done a much better job investing in CIPLA.
Well, that is a really valuable insight into possible things investors could look into as they get into these meetings with the top management of these equities to discuss on how they could increase on share price and profits as they come in. But we'll be right back after a short break with more insights from the East African financial markets and the rest of Africa. Thank you.